In 2020, the industry was about 36, 37 billion. And last year, you saw our report, right? It's 64 billion.
Hello and welcome to FSBrew. FSBrew is the region's first podcast focusing on insurance and Insurtech here in the UAE and the wider Middle East. I'm Vidya. I'm the founder of Forward, a startup that works with insurance companies to build their go-to-market digital propositions.
Hi, I'm Renjit Philip. I work with a boutique consulting firm where I work on M&A, funding, and go-to-market support for startups and tech companies. In today's episode, we have Hasham Piperdy, GM, KSA, and Director for Badri Consultancy with us. So we hope you enjoy listening to this episode. Welcome to FSBrew. It's great to have you with us today.
It's fantastic to be here, Renjit and Vidya. Great to be on.
Perfect. Tell us a little bit, just to get our listeners familiarized. What's your role at Badri Consultancy, and what was the sort of decision-making process that led you to taking this role in KSA?
Oh, that's more interesting. So I'm an actuary. I'm a director, member of the leadership team with Badri. So for those of you not familiar with Badri, we're about 200 strong. We're probably the largest actuarial company covering the GCC region. And my personal role, I head up our business for Saudi Arabia.
Okay, very good. And why KSA? How did that happen?
Actually, by chance, like most of these things do, right? My journey to Badri was an interesting one. I started my career in London. I was working in Asia. And then I was looking for something new, exciting, innovative. And I've worked in something like 20 countries, I was counting the other day.
Okay.
Been really blessed in my career. But I'd never worked in the Middle East. And this opportunity came along. Firstly, it was a region I had no exposure and didn't know much about. From the conversations I had with the leadership at Badri, Hatim Ali, the potential for the market to grow and the key role that we could play in driving a lot of that growth for the business, it was just really exciting. So I took the risk and jumped straight in. KSA in particular has been incredible in terms of growth. I wasn't really sure what to expect, but we can talk a bit more about that. We touch on the numbers and get it more into the details.
Very good.
So in fact, on that itself, I think Badri produced two fabulous reports, very interesting and insightful reports on the performance of the insurance companies in KSA, specifically for the year 2020. Now, we know broadly what are the drivers for the KSA story, but tell us specifically for the insurance industry, what has worked? What was the drivers for such a strong growth in 2023?
In 2023, yeah. So if we're thinking of growth in terms of top line and incredibly in terms of profitability, I think this is the first year that every single company in the whole industry actually made a profit. And there's a few reasons for that. But the top line, the size of the insurance market has been growing at an amazing rate. It grew by 24% from 51 billion to 64 billion riyals from 22 to 23. A lot of that growth coming in motor and medical, the main lines, but also the P&C lines are growing as well. But in terms of that's growing in line with the growth in the economy, but a lot of support from the regulator. There's a lot of initiatives. Maybe I can touch on a few of those and we can drill down a bit more detail later. But in terms of the top line, one of the key changes we had in KSA was there was a lot of uninsured drivers in the kingdom. Has been for a long time. And I've seen statistics quoted something like 50%. It was quite surprising, right? Regardless of the reasons for that, last year there was a campaign from the regulator, from the insurance industry, from Najm, to actually encourage a lot of those uninsured drivers to actually buy a policy. And that actually came through into the numbers. We were a bit fearful in terms of what that impact that might have on the profitability, but it's actually turned out to be very favorable. So it's increased the share of the pie for motor insurers in particular. And the business has been very profitable. The reasons for the profitability, if I can come on to those, right? My experience in KSA, so I've been here for 3 wonderful years now. And during that time, it's been a real roller coaster in terms of the volatility of the results, and a number of reasons for that. But so if I give example, 2 years ago, the industry made horrendous losses on motor, something like 400 to 500 million of underwriting losses for motor insurers. And there needed to be a sharp correction in the pricing to address that. The premiums were just way too low. And as those premium rises came through, that's actually pushed up the profitability. There's other factors as well. IFRS 17 has also played a part.
Yeah.
So the transition, so it's completely transformed the way you report your numbers. But
has there been a pricing change as well from those last 2-3 years?
Yeah, absolutely. I remember when I first came to the market, insurance is not complicated, right? You have an average cost of claims. And if you're charging premiums around here, it's not rocket science to know that you're not going to make money. The premiums had dropped. It was competitive pressures. And there were other factors as well. But the market competitive pressures, there wasn't that much focus on technical pricing at that time, not as much as there is now. The premiums rose from, they were like 300-400 riyals, imagine, so this is majority of motor policies in the kingdom are third party. It's very different to UAE.
Yeah.
So the mandatory third party coverage. And you went from all of a sudden average premiums of 300-400. And after the losses came through, it was a very big jolt, wake up call to the industry, and premiums had to rise, and they rose quite dramatically. So they went up to 1,000, 1,100, 1,200, I think peaking around 1,300.
Okay. So almost 4x, 3x, 4x, right? Okay.
In 1 year. Can you imagine that? Obviously, it hasn't exactly been popular with consumers, but the industry made horrendous losses the year before, and there had to be a correction. But now those prices have dropped back a bit. Companies are still reasonably profitable, but that's a big driver of the growth in the profitability last year.
Got it. Right. I think our follow-up question was on the underwriting performance, and I think you touched on a number of those, but perhaps I'll just try to pick on this thread. Has the data collection or the process of underwriting changed at all in your exposure to some of these insurers? We find sometimes the whole process of getting the accurate data in is the problem, right?
Absolutely, Renjit. Great question. The changes I have observed have been pretty dramatic. We have to give credit to SAMA, now the insurance authority, the regulator. They've been driving for actuaries to get more involved in the companies themselves, and also more technical rigor in terms of the actuarial pricing. Unlike other markets, the pricing methods that we use now, we use GLMs, which are very commonplace in developed markets. It gives you a really good technical, well-established way in developed markets of accurately pricing the risk. So you don't get the cross subsidies, bad drivers subsidizing the better ones, in theory, anyway, if we get it right as actuaries. But that obviously requires a lot more data, a lot more infrastructure on the more sophistication on the underwriting side. And all of those things have come together. If I give you a couple of examples, so the importance of the role of the actuaries getting involved, also the importance of the quality and the amount of data. So the regulator actually assesses, so every quarter we do a pricing adequacy report for the regulator here. And what that report shows is, here's the technical price that was determined or recommended by the actuary, and this is what you're actually selling for. So you can see at a glance, right? Are you offering discounts against what the theoretical rate should be? And what's the potential losses you could rack up? A very simple report, but very powerful in terms of the impact. And on the data side, they're actually pushing us and encouraging us to go to the next level now, to actually move more towards data science, machine learning, AI-driven type approaches. So these are just starting to get traction in my home market, my original home of the UK. And so they're very much pushing for a developed market level of sophistication in price. In my personal view, that's had a huge impact.
Got it.
Because before maybe some companies weren't making, or management weren't able to make the decisions based on complete information, right? Now it's data driven. And if you want to make a commercial decision to increase your market share by dropping your prices, it's a conscious decision, right? Rather than being blindsided by underwriting losses. So a lot of positive changes coming through there.
Which is amazing. Obviously, the way it progresses, it will not be in a linear way like a mature market does, right? It goes in a certain format because it's a developing space. The market moves in a certain pace and then insurers have to catch up. So it's a little bit mixed in the way it's coming through, but amazing to see the change.
Yeah, you're absolutely right, Vidya. It comes through. So this was a big step change, right? And this is something I'd love to see more in other GCC countries as well, the way that we price. Because pricing using this approach, it's up to management. It's still up to management. Do you use the actuary's rate or not? But at least you're doing it with your eyes open. It's a commercial call. We want to increase market share, or we want to be a bit more conservative. You're taking data-driven decisions. Yeah, it's been very exciting, and it's happened whilst I've been here in the kingdom. So it's been fantastic. And you can see the results, right? I don't think these results are by chance, right? People, now even if you wanted to cut the rates, where's the justification? You know what the theoretical cost is going to be. And do you run the risk of running large losses, right? There were some other changes as well in the market, but I'll touch on that more later when we talk about technology and innovation.
So tell us, with all this dynamism, how has the market share and concentration amongst the top 5 companies changed? Typically, they've always been the ones who take the large pie. And also, how has investment income played in the whole profitability story in 2023? I think as per your reports, it still continues to play a large part, but we need to know your views. Yeah.
I haven't, yeah. So I know people, in terms of the top players, so it's a very different market to UAE. So you have, the top 3, 4, 5 players make up. So I was looking at the statistics. So 3 years ago, it was about 60%, and that's increased to nearly 70% in terms of top line growth. There's been consolidation in the market. So the number of insurers has decreased. A lot of the smaller ones have merged. And I think this is something that's being encouraged by the regulator as well. But it's, as the market expands, I think just in order to compete, we'll probably see more M&A activity at the low to mid-sized companies as well. But at the same time, there's still distribution channels have changed, and the smaller to mid-sized players can still compete. What I'd like, I can talk a bit more about what I'd like to see, but maybe touch on that later. Going back to your other question, so you asked about the top 5 players. I have a slightly different view on this video. So in my career, when working in general insurance, I always think in terms of combined ratios, and this is a personal view. Other industry participants may think differently, but I don't think it's necessary to make underwriting profits on every dollar of premium that we make. So you have to segment and think, and so look at combined ratios and profitability, investment and underwriting together. But you're right, investment income has played a significant role in terms of, as the top line increases, you have more to invest. And it does make up a big chunk of the bottom line for a lot of players. So the investment income is pretty steady. The strategies are quite conservative in the kingdom because there are some quite big restrictions in terms of the investments compared to other countries. And most people invest in deposits or government sukuks. The returns are like 5 to 6% in that sort of range. But I very much see it as you have to look at the performance of the portfolio in aggregate and look at the combined ratio. So for some lines, there's a clear strategy where you know that your margins are going to be wafer thin on the underwriting side, and you're doing it purely for the investment. So for example, if you're pitching for a large group medical contract, for example, the premium might be 100 million. You might even make a slight underwriting loss just to get the cash, but the investment return on the cash flow will still turn a profit. So different strategies for different lines.
Yeah. Right. Curious if obviously the interest rate regime globally or more in the US has gone up over the last 12 to 18 months. I'm not sure if the sukuks track that. Have they gone up as well? They have. Okay. So that contributed a bit in 2023.
Yeah, because, again, I'm not an economist or an investment expert, but so a lot of because we're pegged to the US dollar, the bond market, the sukuk yields tend to move in line with US treasuries as well.
Okay. Got it. Excellent. I think you touched upon this, and since you mentioned CORs, So it's only fair that I ask you combined ratios of Saudi insurers versus those 22 countries that you've been to, global benchmarks, Saudi. How are they looking now? Obviously, now they're as profitable, but generally, is it better, worse off, or in
Generally,
line with emerging markets? What do you see?
Generally, okay. So I think so if I compare, if I look at the absolute numbers, and if we took an average over the last 3 to 4 years, for example, they're much lower than where they need to be, right? Compared to global markets. And I'll talk in terms of loss ratios because a lot of our viewers probably. So it's not typical, for example, in the UK to see motor loss ratios in the 60s.
Yeah.
Now, 20 percentage points higher in the kingdom.
Mm.
So clearly there's some way to go before we can get to those sorts of levels.
Mm.
But what I would say is the level of volatility. You don't get this level of volatility typically in other markets. And again, I'll give you the example. I was just opening the page on the industry report just to remind myself. So I talked about motor, right? So the combined ratio for motor line in 2022 was a eye-watering 119%.
Wow. So for our listeners, that means if you are earning $100, you're losing $19 on each of those 100, right?
Exactly. For every $100 in premium, you're paying out 19 in claims, right? In very simple terms, right?
Yeah.
Essentially, but for actually it's more than that. It takes account of investment and everything else, but you get the idea.
Correct.
But for motor in 2023, that dropped to 93%.
Oh,
Okay.
fabulous.
So yeah, of course, if you're going to, the average premiums are going to rocket in the market. On the medical side, they were quite steady, so 97% overall to 95%. And then on the general lines on P&C, they've been hovering around the 40s to 50s range for quite a few years. Very profitable lines.
Okay. Got it. So no major fires, floods, or earthquakes and stuff like that.
Knock on wood, we haven't had. I was absolutely amazed, like the Dubai floods.
Yeah.
Climate risk is actually moving up the agenda, but I know that's a question for later. But we haven't had anything of that magnitude. Not to saying I don't want to tempt fate, but touch wood. But when I was talking to reinsurers when I first came here, actually they said across the whole of GCC, it's not Nat Cat prone at all.
And now we had revision.
The flooding in Dubai. I was meant to come to Dubai that weekend, and people were telling me actually waiting for the Q2 results. I think they're going to be quite bleak.
Yeah, what we hear as well. We had a podcast recording that we had to put back because of the rains and stuff. So understandably, interesting.
It was on path to profitability, I believe. Results were great for UAE.
Yeah, they were.
Rains pulled it back.
But this was a once in a so when I spoke to reinsurers to get a view of how reinsurers assess the region, they said it's relatively benign in terms of nat cat risk. But these days with climate change, this is the sort of things we're going to see more of in the future, right?
Yeah, the 1 in 200 events are becoming 1 in 40 events.
They are actually. So actually we do have limited scale. Yeah, so we have flooding in the western regions, right, in Jeddah. So that not on the scale of Dubai, but still pretty heavy losses on property and motor. And again, when we're assessing the risk as actuaries, trying to set the reserves and do the pricing and so on, you make an allowance. What's the frequency and likelihood, and what's the probable loss going to be? And you talk to underwriters, you talk to market participants, you get a view. It's very much judgment based, right?
Yeah.
And they said, and what were people saying? Oh, once in a generation type flooding. Now we're getting this flooding in Jeddah almost every year. This is, I think, with
the
climate
frequency
change,
is changing, right, dramatically.
Yeah. And reinsurers are changing their views as well because they're bearing the brunt of a lot of these losses.
Yeah.
Correct. I was reading a report. They have a different view on the Nat Cat for the region, and they've obviously hiked up the rates as well in all the renewals with insurers. Yeah, so it's going to be different ballgame now.
Yeah.
Now onto you mentioned about having a separate regulatory body for Saudi Insurance Authority we all know of, which is a fairly bold move from the government to set up a standalone insurance authority. What has changed after that? What are the changes that you have seen recently, and how is that influencing the insurance market's performance? Is there more agility? Are there more innovation? Are there more initiatives that we can expect going forward?
Yeah, I think when I heard about the news to have a completely standalone regulator focused on insurance, it's an absolutely fantastic move. The insurance sector has grown so rapidly, it warrants a separate focus by itself. So just to the numbers, you're talking about growth. In 2020, the industry was about 36, 37 billion. And last year, you saw our report, right? It's 64 billion. This is excluding Saudi Re, I think. So there's a bit more for that. 70% in 3 years. And it's going to continue to grow in line with changes in the economy. In terms of having the specific focus on insurance as a distinct industry to banking, asset management, all the other things that the central bank regulated, I think that's a really great move. And absolutely, in terms of my experience with the insurance division and also insurance authority now, has been a very constructive one. One of the things I really like is they're very consultative and proactive. And so very much a regulator who wants to nudge and drive. There's obvious they want to drive sophistication and so on, but they also want to push innovation as well for the benefit of everybody, right? So if there's a technology that's going to enhance efficiency across the whole industry and potentially bring down the costs and reduce the risks for all the market participants in one foul swoop, they do it. And it comes from centrally and it's with a purpose. And there's been a few really great moves that they've done. So one of the things is, and this isn't just the insurance authority, but also the health regulator before, which is now part of the insurance authority. So we used to have the Council for Health Insurance regulating medical insurance, and then the central bank regulating insurance in general. Now they've come together under the insurance authority. I'll give you one example of that. On the medical side, they've introduced a new centralized claim settlement system you might have heard of, called Nafis. Now, imagine you've got 25, 30 market participants. For some of the smaller ones, right? So the larger ones, yes, they will invest in digitalization and so on. But would the smaller ones have the capital, the appetite to invest millions in technology to make this work for unknown upside? Probably not, right? So instead, we've got one centralized system that's been introduced. Of course, everybody pays a share towards it, but the whole industry benefits, right?
Yeah.
So you don't have masses of paper claims the way you used to anymore. You have a lot more data that you can do better pricing on and risk selection and assessment on. And this is being phased in over time. So all the hospitals, the providers are coming on board in phases. And they just made the decision, then they just did it. And you can already see the impact it's having in terms of the quality of the data, the costs of running your medical books, reducing.
So Hasham, is this very specific to medical alone, or is it a pan-line?
This is for medical. Yeah. I just wanted to give one example.
Right.
There's other examples of where they're driving innovation as well. So they're encouraging. So for example, digitalization of distribution, right? So UAE is, again, I contrast this with UAE. UAE is very broker-led, right?
No, absolutely. And we don't have this in the UAE yet, right? The whole centralized claims database, forget about health. We don't have it for even motor, right? So that's a reason why there are some private companies doing that in the UAE. So that's another interesting approach. Yeah.
I think in some areas, it's one of those where, sometimes not all regulations work, but it's regulation with a purpose, right? So you're driving and developing the market. And of course, there's a goal related to that, right? So as part of Vision 2030, there's a specific target for insurance penetration. And of course, as the economy grows, that target keeps increasing. And of course, the capacity and the commercial opportunities increases in the kingdom as well.
Yeah, absolutely. Now, I know you touched upon the pricing aspects of, just want to get a sense of how price has evolved, let's say last 24 months in the medical space. I know that motor and medical drive a majority of the GWP of the industry, and also a few lines on what is the outlook for non-motor and
Yeah.
non-medical lines, those neglected cousins of our industry.
Yeah, actually, it's interesting. No longer neglected, but I'll come on to this, right? So, motor and medical, yeah, in terms of pricing, yeah. So, motor prices, there was a big change in October last year. We had this big campaign for uninsured drivers, this pool of, in theory, 50%. I've seen figures as high as 50%. I don't think anybody actually knew. But there was this campaign run centrally, so supported by the entire industry to address this. And there was a carrot and a stick, right? So the carrot was a lot of companies offered discounts to encourage, and incentives to encourage people to buy the insurance. And also there was a stick as well. So a fine which would be charged every 2 weeks until you buy a policy.
Okay.
So it didn't take long before it became, even if you were resistant, it just made sense financially to buy a policy.
Yeah.
But what that did was, and I always thought this was unfair, right? So if you have a large pool of drivers, it's not fair on the pool that has bought the insurance. Obviously, the average premiums are too high, right? Because your exposure base is too low. And we had a huge uptake. And just to give you an idea of numbers, so Najam, which is more like the central authority, I think of it as equivalent to the traffic police, right? But they also do the assessment of the claims at the accident sites, that sort of thing. It's a central body, again, owned collectively by all the insurance companies, right? And they produce a report every month, which shows the number of new policies issued. And it averages, it's been pretty steady, 400, 500, 600, bit of seasonal variation up and down. After the campaign, it rocketed it increased it something like 3x in 1 month. So you could see the campaign had an impact, and that drove a lot of the growth on the motor side as well. And one of the fears I had, and we had as a company, as actuaries, is we don't know what sort of risk we're taking on. What's the profile of these new uninsured drivers coming into the pool? Is it going to be better or worse? And we had quite a conservative view, but so far, touch on wood, it's been proven wrong. It's actually increased the size of the pool and not brought the profitability down, which has been quite interesting. So now we're 2 quarters on, we've got a good idea. On the medical side, we have seen a lot of growth, and there's going to continue to be growth. Actually, the longer term prospects for growth are immense. There was a conference I was in last year where a gentleman from one of the ministries under the Ministry of Health was talking about one of the initiatives to move more of the public sector healthcare into the private sector over time. And the figures he quoted were eye-popping. He mentioned, this was Ahab at Case Mix. I think he mentioned something, I'm going by memory now, but it was something like 150, 200 billion coming into the private sector imagine that over the next 10 years.
So that's worth highlighting. So right now it's more of a government-led health insurance scheme, and that could move to the private sector is what people are looking at.
There's there's public sector and private sector, right? But we have mandatory coverage on the medical side, and we have group, business, and SME. That's normally how it's segmented here. And
presumably
mandatory.
Sorry to jump in again. And presumably that mandatory cover is a bare bones cover, and as the population gets richer and all that, and gets more sicker, unfortunately, they will need more comprehensive cover, and that will also drive up the insurance premiums. Right.
Actually, we did last year in our conference, we actually did a comparison side by side, comparing benefits in different countries. And actually, it's not a bare bones cover. It's actually incredibly generous. Yeah, we found an interesting comparison. So when we did the side by side comparison, we found the benefits were richer in Saudi, but the premiums were lower. Then UAE, which was quite interesting. And then, of course, we did separate comparison because Dubai and Abu Dhabi is quite different as well. But the benefits themselves are actually quite generous. But maybe it's a function of the demographics. That's what I think of. But but in terms of so even the minimum coverage is, in my view, quite decent and generous. But there's a lot of variation in terms of networks that are provided to different segments of the market. So the average premiums for small SMEs who are just buying it for the mandatory coverage could be 500-600 reals. And for the all the way up to the VVIP type networks where 10, 20,000 premiums and a lot in between as well. So it's quite a dynamic market. But again, the pricing sophistication is there and people are monitoring this very actively. And with the introduction of Nafis and the extra data potentially that this is going to provide, hopefully people continue to maintain some discipline. You do get pockets of time to time where you see some craziness and price competitiveness here and there. And that's the volatility I was talking about. It's been a real roller coaster in terms of the loss ratios in the market. But I think one of the positive things, I haven't heard many positive things about IFRS 17, actually. A lot of complaints about. But one of the good things about IFRS 17 is you can't hide those losses anymore. So if there's less scope to cross-subsidize those losses, if you like. So before, under the old regime, rightly or wrongly, you could write a lot of bad business, but the losses would be hidden because it's cross-subsidized with more profitable business elsewhere. Whereas in IFRS 17, you can no longer do that, right? If you decide I'm going to slash my premiums and get loads of top line, you have to take a huge hit in your P&L for that quarter, because unfortunately Mr. Actuary like me or Hartim will come along and have to do the assessment, and if it's unprofitable, it's going to be a huge P&L here. So I think that's going to change behavior as well. You have more discipline. That's my view.
Ironically, that kind of strikes against that COR portfolio underwriting as well. Right now, you have to recognize the loss at that product level more strongly, right? And the timing issue has also gone away, right?
I think, but I think thinking back at a portfolio level, right? So you still have to, manage your portfolio, but I think more granularity and recognizing the timing is quicker, the amounts are larger than we had under the old IFRS 4 regime. I think this is better. It gives more visibility and you can act faster as well as management. But you're right. It takes away. You're more zoomed in on particular products or lines of business. Arguably, maybe a move in the right direction.
No, absolutely. There were products that were hidden away and making losses.
It just wasn't visible.
No, and that's the way it should be. You were saying the narrative around non-motor, non-medical.
Oh, yes.
So in Saudi,
really exciting, right? I wasn't in this market. I don't know if you guys were, because people tell me the story of Dubai and how the miracle of Dubai, right? And how it developed the economy over the last 2 decades, right? And imagine something like that being accelerated across the whole kingdom. The invest on the property and casualty side. So we've actually conducted research in this area. Some large multinationals have asked us to actually conduct research. And this is actually also driving a lot of interest from local players as well. Because traditionally, the way the market has worked here is these are very high value exposures. And even for the largest companies, it's a huge risk to insure. Nobody has the capacity to insure like 100 billion. The numbers are crazy, right? 100 billion, 200 billion project in NEOM, for example. Even the smaller property risk, easily getting into a few billion. So typically the strategy has been more of a fronting type approach, right? We'll take the risk, but we will cede out most of it to reinsurers. And it's been very healthy in terms of every now and then you do get large losses. You get the flooding in Jeddah that I mentioned, which is actually becoming more frequent than it needs, than predicted. You have, every now and again you get some large fires or other property or engineering related, but the combined ratios are decent. The loss ratios and combined ratios for these lines are very healthy. But the top line, imagine growing from I'm trying to remember the numbers, but it was about in US dollars, it was about 2 billion, that sort of ballpark, right? Imagine it grows in line with the growth of the value of the projects that are being announced in the kingdom. If all of those come through, even if you assume, say, 40 to 50% of them come through on time by 2030, you're still talking about the size of the non-motor medical market on the insurance side increasing by 4-5x potentially.
Okay.
It could be enormous, right? Depending on your view, how you assess it. Some people have a more conservative view, some people are more bullish, right? But it could easily be in that sort of range. But then how much of that do you retain in the kingdom?
Correct. Yeah, that was what I was going to ask. Is there enough capacity to retain more of that premium within the kingdom, or is it the international reinsurers who are going to win in this game?
I think there's room for everybody, right? So we're actually seeing interest from so everybody who's got a potential skin in this game, right? So international reinsurers are talking to us about what's the size of the opportunity. We've got local players from the largest to some of the small to mid-sized ones as well, looking at how do we develop and grow. We want a slice of this, even if it's a very small slice. What sort of model can we employ? So one of the things, for example, I'd love to see adopted in KSA that you see in the UAE, you have lots of co-insurances, right? So you have small to mid-sized insurers coming together to to collectively increase the capacity that they can take on. You don't see so much of that here in KSA, but this one potential avenue. You've seen with Saudi Re to increase their capacity. I think there was an announcement of an earmarked investment from the PIF to increase the capacity in Saudi Re as well. And also the small to mid-size, there's a lot of interest. So watch this space, because I think the retention, I think it's going to move from fronting to more business written in the kingdom. And who knows, maybe you might even see more reinsurers in the kingdom over the next couple of years, just to take advantage of this. But at the moment, a lot of it's going out to the London market via DIFC in many cases, right?
Yes, indeed.
So, but I think there's the size of the pie is potentially so large. There's a lot of opportunities for a lot of market entrants to take advantage of that, from the smallest to the largest ones. Very exciting in the P&C space.
Going on to another very interesting space is the Insurtech landscape in Saudi Arabia. There's a lot that's happening there. There are some really interesting players like Tree, Co-Insure. Then obviously there are these aggregators like Tamini, Ananas. I think there's 2 more in the pipeline. So with this, in the recent past, there's a number of motor insurance related regulatory changes as well. Now, there's huge traction on all of these digital companies. What do you think about their market potential in KSA, and how are they going to shape up with all these changes? And as you said, the pie has increased.
Oh, yeah, it's wonderful to see the innovation, right? So the best example is like in the motor space, right? So imagine the transformation so Tamini, part of Razan, right? The
which went into
dollar unicorn, right?
Yeah.
Yeah, incredible. Absolutely amazing story behind that company, right?
Yeah.
And they've driven so much innovation, right? So they've completely disrupted the market in a positive way, right? So imagine a market where you move to, I don't know what the percentages were before, but I assume it's similar to UAE and other markets. Imagine the transformation going to now where 80 to 90% of motor premiums in the whole kingdom are through digital.
Yeah.
Imagine that sort of transformation in only a few years.
Yeah, and what I really like about this is you can just do a lot of that transaction online without paperwork and emails involved, right? Because you still have those databases connected. I can just put in my Ikama number, then the registration is pulled, the car and the driver information. Yeah, it's all seamless.
It's a matter of minutes. It's wonderful. But from the insurer's perspective, you've got to be very careful with an aggregator or a marketplace like this. I saw this. This happened in the UK.
Yeah, UK is a very perverse example of this. The power has completely shifted away from the insurers.
To aggregators.
Yeah, correct. So we call them, PCWs, right? Price comparison websites, right? So same thing, right? So completely shifted, right? 1 or 2 of the largest insurers decided to stay away. But what that meant, but they had a massive brand by themselves. But what that meant was millions of marketing dollars on digital advertising, developing their tech stack and everything else, and they're able to compete. But for the smaller insurers, it's been wonderful, right? It levels up, creates a level playing field. So all of a sudden, it doesn't matter if you're a 10 billion insurer or a 500 million insurer, right? From a customer perspective, you log onto the portal, it just gives you all the rates and you have access to the whole marketplace, right?
Yeah.
And the regulator enabled this, they authorized, and it was a challenge for insurers at the beginning, right? Because you need a very different mindset to handle this fast-paced retail, digital, online. You have to monitor things, track things like production daily, weekly, if not daily. You've got to, because there's winner's curse, right?
Yeah.
So if you're getting low, the biggest warning is, you put in a trigger if you're winning too much business in one type of vehicle, because then your rates are too low, right?
Correct.
And you have to put in adjustments and all this sort of thing. And when this first came in, you didn't have this level of monitoring and sophistication, and the checks and controls were just starting to be introduced, right, in the kingdom. And a lot of insurers, so when they entered the aggregator space, all of a sudden you have a small insurer who's written more business in one quarter than they did over the last 18 months, very excited about the top line, but then the claims come in, right?
Right.
Because you have to continuously dynamically adjust your prices, right? And that's settled down, and now we're in a better place now. But the other good thing is for the consumer, right? The regulator stepped in and said commissions will be capped at 2% for the mandatory coverage as well. And I know that commissions are much higher in other places as well. But again, all of this means potentially it's a win for the whole industry, right? Because there's a lot more efficiency in the system. There's more sophisticated pricing. So you're charging a fair price for each customer. It opens up the marketplace for smaller insurers as well. Potentially very beneficial for the industry and a great example of innovation that's been supported centrally. And it's been embraced by society here, because you never know how the policyholders are going to react, right?
Yeah. Fortunately, it's a young population, quite digitally savvy. So they're very happy to adopt.
Absolutely. Demographics really support the innovation.
Absolutely. So now shifting a little bit to macro issues and something that we touched upon, the whole thing about climate. And so how are these KSA insurers kind of addressing this climate related risks and also opportunities that are coming up, I'm sure, in the space of renewable energy risks? How are you playing a part in helping them address these issues? Be good to know.
Yeah. And what I would say is, as far as I know, climate risk so far hasn't made it really to the agenda, as a climate risk and sustainability. But again, that is about to change in quite a big way. But if we look at the industry itself, we're predominantly non-life market. And if you think about transition and physical risk, the two buckets of climate risk, right? So the physical risk is very real. So with the increased frequencies, so we talked about Dubai, the flooding that we're not supposed to get. We're supposed to get once in a generation, but we're getting it every year or every 2 years in Jeddah. This is very real and immediate. But climate risk is going to be moving higher up the agenda, because actually one of the things I'm doing, I'm part of a working party that I'm heading up, like a subgroup for the under the Insurance Authority, with a load of industry participants actually looking at this very theme, climate risk and sustainability. And so there's actually an intention to actually introduce climate risk and sustainability related reporting in the kingdom. So you have the accounting standards, IFRS S1 and S2, but also so there's going to be a market event on that sometime in early August, where for the entire industry, which I'm really excited about, to actually introduce that and bring that to the C-suites of the industry. So change is coming. The other thing is we're looking at risk-based capital, and I won't go into the technicalities, but in essence, a lot of the capital charges that insurers have to hold have to be based on extreme events, right? So what if you had extreme nat in the kingdom? So under the new risk-based capital regime, so that we're not sure when that's going to be introduced, but we're actually going through the consultation right now. But based on the latest publication, yeah, this is something that now insurers cannot ignore, because it's actually going to be forming part of how much capital you actually have to hold on your for solvency. You have to assess and make sure you balance, monitor, optimize, and you're comfortable with the level of climate risk you're running, because it will directly impact how much capital you have to hold, as well as being the thing to do, right? But one of the things, so as part of my role in this group, and what we wanted to do collectively as a committee, and the insurance authority is very supportive of that. A lot of people focus on the negatives: climate risk, more nat cats, even hotter temperatures leading to more health related issues, whatever you want to call it, right? Negative, negative, negative. So, but I think it creates opportunities as well, right? I think, Vidya, you mentioned renewables earlier, right? So the kingdom there's also a shift away from petrochemicals, a clear stated shift, right, to move the economy away from petrochemicals towards renewables. So all of these huge infra projects that are announced, they have a KPI. They have to be sustainable, built in a sustainable manner. There's earmarked investments of, I can't remember the exact numbers, but it's something like 30 to 50 billion US dollars, something in that vein, in solar. So now, again, what's the role that we are playing? All of a sudden, regional players, reinsurer, multinationals because a lot of the energy risk in the kingdom is actually seeded out. Very little is retained.
Yeah.
You need very specific expertise to underwrite that risk. But where this risk currently sits, whether it sits in, most of it in London market via Dubai or not, right? Via the IFC, there's a big interest, like, wow, there's 30 to 50 billion earmarked for this. Obviously, that's going to lead to a potential for significant insurance premiums, right, in this area. Firstly, how does this translate to premiums, and how do we strategize and get a piece of that? So we're having a lot of these sort of conversations with multinational reinsurers, for sure.
Nice.
Not so much with the local market players, because I think there's still a lack of underwriting expertise.
It's not reached their agenda as of now. Yeah. So.
Yeah, because they write the business, but they seed out most of it. So maybe they will retain less than 1%.
Oh, it's that small. Okay. So they're like glorified broking houses in that sense. Yeah.
I think but you need very specialist expertise for energy underwriting. And there's probably a handful of people globally who have the expertise to do this. But now the size is, I think, Renjit, this might change, right? So with the new investments coming in, there's a new market opportunity. And does solar carry the same risks as breakdowns or explosions in traditional petrochems? Arguably not, right? You don't have the risks you just don't have the same level of risk. It's a very different type of risk.
Correct.
So I think the risk appetite to insure these will be a lot higher, potentially. And having some very exciting conversations. And we're actually introducing this concept to a lot of the local insurers as well, that this should be part of their strategy and on their agenda as well. But this whole climate risk, the committee that we've formed and the initiatives that are going to happen in the kingdom, very excited about that, as you can tell.
I think we had a similar conversation with the Marsh CEO as well. And she was talking about how Saudi is very exciting from infrastructure projects point of view, and how so much of sustainability aspects can be weaved in from an underwriting discipline, from expertise deployment, from capital deployment. Then so much can happen in that region for sure.
A lot, actually, a heck of a lot. And also on the sustainability side, right? I really think one of the other things is, given the scale, Saudi could even become a regional or global hub for innovation in this area. So there's loads of opportunities and loads of conversations we're having at the moment. Very exciting time.
Oh, exciting. Wonderful. So just shifting gears a little bit on the smaller insurance companies that are there in Saudi Arabia, can you tell us some of the challenges that they may be facing, balancing especially the act of growth versus maintaining discipline, underwriting discipline, and also it'll be good to know in that relation what that means in terms of mergers and acquisition activities as well.
Yeah. So I'll play out two scenarios, right? So the first scenario is if we continue down the current trajectory, it will be more and more where everybody competes for everything. Then it will be a real struggle for the smaller. It will be challenging because yes, you have access to the marketplace and where commissions are capped or restricted, but you can't ignore the economies of scale. So the difference between the expense ratios and this is one of the challenges of IFRS 17. It's very hard to see what the expense ratios are these days, but it's still going to be similar to what it was before. So the gap between the expense ratios of the largest players in the industry, which are single digit, 5 to 10% perhaps, versus the smaller players where they're running into 20, 25%, right? It's all else equal, just the economies of scale. It's very hard to compete head to head. And potentially, you do need, you could see more mergers and more activity. Also, with the changes in the capital requirements, insurers might decide, so they'll have, depending on what the new risk-based capital might be versus the current one, we don't know at this stage. Maybe it will lead to an increased capital requirement, maybe it won't. In the event that it does, then maybe it's more efficient to merge from a capital efficiency point of view as well. Scale, and I think there will be more merger activity. But the other scenario I could see play out, which I would like to potentially also see, is similar to other developed markets, right? Where there's room for everybody. The market is increasing, like I talked about earlier, it's increased over 3 years from 35, 36, 37 billion to 64 billion last year, maybe 65, 66 if you include Saudi Arabia as well, right? If it continues on this trajectory, there's much more scope for specialization, right? So and again, I go back to the UK, right? So if I get a motor quote online, I'll get quote from maybe 25, 30 companies, right? But all of those companies are making profits. And how do they make profits? They segment their portfolio. They decide we want to concentrate on a particular and specialize in a particular, the consumer might not see it, but it's there as part of the strategy, right? And the market is big enough, right? You could become a major minor, right? I write across the general market, but perhaps I will specialize in fleet business in this industry segment and really get all the data and become the leading player. And just as an example, lots of different areas for specialization. The market is big enough. What I'm seeing at the moment is everyone's just chasing everything else. And now we've got the scope. And that's why I'm actually more excited on motor and medical. There's lots of scope to specialize by industry, by region, however you do it, right? Segment. On the P&C side, there's much broader specialization opportunities. One of the other things I forgot to mention earlier, where the insurance authority, the regulator is actually supporting, is more mandatory covers on the P&C side. For MedMal, for example, that was introduced as a mandatory coverage, a standardized policy. They've increased the range of occupations. That increases the pool of premiums for insurers to take advantage of and underwrite. Also, we're seeing that on PI, also on the IDI for the defects insurance. Like it's a mandatory construction warranty type product.
Product liability type of thing.
Yeah, construction warranty, and it's a 10-year product, and it's mandatory, right? And it's under a joint pooled arrangement for multiple insurers. There's one lead, but it's a shared risk and shared liability across.
So there's a risk pool and stuff like that again.
Yeah, exactly. And otherwise, no one insurer would have had the risk appetite to take this on. So again, this innovation was encouraged by the regulator to form this pool. And it means a lot of the local market participants benefit. It's a 10-year coverage and so on. And there's a lot more examples of this sort of activity in the pipeline as well. And this will only serve to increase the market size for the local market. In fact, it's the amount of interest that we've had recently in Badri. You can ask Hatim as well, from international entrants looking to enter the market because of this growth trajectory and the fact that it seems to be calming down in terms of underwriting discipline. The regulatory regime is very solid. The opportunities are there. So I think there's going to be more new markets coming in from outside as well. You've seen obviously Adnix come in. There's others from the GCC that have come in. You saw
The future.
Aviva buying. You saw
Future is
GIG
bright.
buying.
Yeah.
It's really bright. Yeah.
Ah,
Very
good,
excited
good.
about this market.
Very
Hopefully
good.
bright for us as well.
Excellent. Yeah,
Good for you
absolutely.
guys.
Absolutely. So as we come towards the end of the podcast, we have this rapid fire section,
Okay.
and the answers are expected to be in 60 seconds or fewer in terms of time. If you're ready, we'll fire them your way.
Go for it.
Okay. So what would you say is the biggest lesson that you've learned in your career?
Biggest lesson, don't be afraid to challenge and take risks.
Perfect. What would you say is the one word that describes your leadership style?
Motivational.
Motivational. Excellent. What would be your favorite city for travel, business, or pleasure?
Does it have to be a city? I choose Ubud in Bali.
Nice. It's a great location. Lovely location. There's a monkey grove there, right? So which is interesting as well. Yes.
Yeah. I hiked. I hiked up the mountains. It's just beautiful.
Yeah. It's great. And what book, blog, or podcast, documentary do you see yourselves recommending to your family and friends the most?
Oh, recommending to family and friends, I'm not sure. But in terms of personal favorites, I liked Jeffrey Sachs' The End of Poverty.
Oh.
Jeffrey Sachs' world, I actually got to meet him in person, which was quite exciting. But
oh wow,
yeah,
okay.
so he wrote this book, I think over a decade ago, talking about how you can really end poverty using economics. It was amazing.
Yeah.
Inspirational story. Yeah.
Perfect.
Lovely.
Over to you, Vidya.
Thank you. So I'll fire over with you. Tell us what's the most exciting tech innovation in insurance for you?
For me right now, it's on the health tech space and wearables.
Okay.
I love the whole discovery vitality concept. We've got it in KSA now with Taunia.
Yes.
It's just amazing. I love it. Moving to the wellness space. Really excited about that. Love that.
Excellent. So who's the most inspiring entrepreneur or business leader that you look up to?
Cliched, the late great Steve Jobs has to be, right? Which other guy gets fired from the company they founded and then comes back and does what he does? Incredible. Immense story of resilience. Obviously. Yeah.
It's a classic. So you prefer to work from home or from office?
These days, the amount of traveling I've done, could you put a third / airport lounge?
Yes.
Lounge / plane / car. But no, for me, I like to separate. Yeah. I like to kick my and chill when I get home. So I like office.
Nice. Okay. What's like the top priority for you at Badri in KSA for the next 12 months?
Okay. So continue to surf this wave, supporting the industry and driving this climate risk and sustainability group. Want to play make a real impact as part of that.
Nice. Okay. And what's like the biggest risk you've ever taken?
Okay, I wouldn't be here where I am today. I'd probably still be in London if I didn't just jump at the first opportunity to work abroad. Just taking that challenge, taking that risk. I had no idea what to expect. I knew nothing about the market, but it's definitely shaped the way I think about the world. And if I didn't take that risk, I wouldn't be here today.
Right.
I'm very blessed.
Excellent.
Fabulous. Great. So that brings us to the end of the podcast. Thank you so much for sharing a whole bunch of views about the KSA market. It was a pleasure chatting with you. Thank you for
Likewise. It's been absolute joy on my side as well. Thanks very much, Vidya. Thanks, Renjit.
We completely enjoyed it. Excellent.